afternoon. Welcome. You're watching Countdown on Bloomberg went live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. The markets remain quiet ahead of the November series expiry. The Nifty trades with marginal gains. Jet Airways comes off the day's high after it signs a code-sharing agreement with Delta Airlines, Air France and KLM. Bitcoin surpasses $10,000 mark for the first time ever, gaining over $2,000 just in the last 4 days alone. ICICI Bank's Chanda Kochhar says the onus is now on the lenders to find a resolution to the NPA issue as soon as possible.
And we'll make you hear a slice of that conversation with Chanda Kochhar a bit later on in the show as well. But thanks for tuning in to Countdown. The market's very, very flat ahead of expiry. I think so. Yesterday and day before have been extremely flat days. Don't forget, day before yesterday to Monday, it was only in the last half an hour that the bank shot up and we had some bit of a movement. So lying very dormant. I don't think the broader markets are doing enough as well. I don't think the Nifty bank has really moved up dramatically or moved down dramatically as well. So about 0.25%, nothing too dramatic. Similarly for the Nifty bank as well, I don't think there is too dramatic a picture, and the market breadth advanced decline looks fairly normal as well. So let's pull up the heat map and show you what's really happening. Just remember, a bit of a convergence in the last few minutes of trade. But pull up the heat map and show you what's really happening, what's moving and what's not. Even Stevens, Axis Bank giving up some of the gains, UPL giving up some of the gains as well that it has had in the last few days. But otherwise, no noticeable losers. And in terms of gainers, I think that one big surprise to probably everybody's mind today is what's happening with Bosch. Now 6% higher, and this would be amongst the strongest moves in the last few months, at least to the best of my memory, that I've seen Bosch do. So good move for that one. Otherwise, nothing too noticeable. Some heavyweights are not correcting, which is a good sign. The likes of L&T and Reliance Industries would probably fall in that bucket. Maybe the activity is more brisk at the broader end of the spectrum, because I did see a lot of double-digit gainers. But Pradeep, the market breadth is just about even, Stevens.
Yeah, but if you look at some of the most liquid mid-caps, I mean, the stocks where there is significant volume so far, there are more gainers than losers. And I have found some of the names like ADF Foods, which continues to move up. Now, interestingly, over 3 weeks, this stock has gained 45% so far. And that's interesting. The other stocks also that I'm going to mention, most of them are in fact consistent gainers. Look at Madras Fertilizer. Yesterday also, this stock was locked at upper circuit for most part of the day. And today again, you have a circuit at least in the second half of today's session. Then you look at Canoria Chemical. This stock has also moved up around 13% in today's trade, but in the last 2 weeks it has gained around 25%. Uniply Industries is another interesting stock, up 60%. And look, if you look at the monthly gains, it's in excess of 60% now. So this is a out and out outperformer, and still you don't see any pressure here. Religare Enterprises, after a long time, started moving up, is a key gainer today, is up 55% in fact over a month. You also have some of the gainers like Capacite Infra. You have a Shankara Buildcon up again today as well, 25% so far this week. You have Sobha moving up today. So every day we have a significant mover in real estate segment. Over the last 2-3 sessions, this has been the trend, and today I think it's Sobha's turn. Also look at Eris Life Sciences, has gained 35% since listing, continues to trade strong, up 6.5%. There is one significant loser, that is GNA XL, which is again a trader's favorite stock in a way. This stock moved up by around 15-20% in 2 weeks' time, and thereafter is finally correcting today. Just like some of the T stocks like McLeod Russell or a Praj, which have also come under pressure in today's trade.
Well, clearly, market seems to have come under pressure. India Volatility Index just in the last 5 to 10 minutes is back in the green territory, above that mark of 13. But overall, if you go by the trend as to what's happening in the futures and options market throughout the day, Nifty has been trading in a very, very narrow range. In fact, it's consolidating around those levels of 370, 10,370 to about 10,380. In terms of what to watch out, levels on the upside, watch out for today's session, yesterday's high of 10,410. On the downside, Nifty needs to protect that mark of 10,350, and actually it's inching very closer to that mark as it's trading currently at around 10,366. What's happening on the futures and options market then? In terms of the options data, the 10,500 call has seen significant writing. It's added almost 10 lakh shares, but remember the premium is just about 3 rupees. The 10,400 put, that's in focus. It's added almost 11 lakh shares. The premium there is almost 43 rupees. So that's telling you the first support for the index will be coming at the mark of 10,350. What's the range for expiry tomorrow? So far, the options data is indicating it's a 100-point probably range that we are working with, 10,350 to about 10,450 on the upside. Bank Nifty, the range remains the same, 25,500 to about 26,000. That's where the maximum open interest concentration is. Just two stocks I want to highlight. Shriram Transport, that stock's gone up on very high volumes. If you look at the cash segment, do watch out for the delivery data there. It's also trading at its 52-week high today. On the future side, we've seen long build-up coming about for both November as well as December futures. So watch out for this counter. The other one is Granules India. It's seen moves of almost over 5% today. Remember, this was the counter. In the last 5 to 6 sessions, we've not seen any major moves coming about. The December futures have seen significant amount of open interest build up, and even on the cash side, the volumes have been higher than yesterday.
Well,
in fact, I'm curious to know what's happening in the dealing rooms really, because the experience is that towards Wednesday and Thursday, all these derivative analysts get busy, when expiry is nearby, and they do a lot of turnover. In fact, if you ask them, they get highest turnover on the expiry day. But looking at the volatility in the indices or the heavyweights, doesn't look like much is really happening this time around.
Well, I think the expiry is also going to take place almost at all-time high levels if I have to compare it to the previous expiry, which was around the mark of 10,250 or 300 thereabouts. So the major, I think the turnover will obviously you'll get to see tomorrow. In terms of strategies, now whatever premium is left, because till tomorrow and even today, the premiums have been contracting because the time value of money for these strikes is nearing zero, which will actually be zero by the end of the trading day tomorrow. And that's why you'll see a lot of writing coming in open interest addition, and that's how your volumes also go up.
Yeah, also I think just before I go to Hemang, I think we also got to keep in mind that nowadays, unlike the previous years, there are 3 other Bank Nifty expiries that happen on 3 Thursdays when the volumes touches that 10 lakh crore mark on the options front too. But nevertheless, let's talk about all of this and more with Hemang Jani, Senior VP and Head of Equity Sales and Advisory at Sharekhan, joins us right now on the show. Hemang, always good having you. Thanks so much for taking the time out. What's happening, Hemang? I mean, every day within a select band of themes, be it some soft commodity names, be it real estate, be it technology, mid-cap IT, we're seeing stocks moving on and hitting new highs. How are you observing what's happening currently?
Yeah, good afternoon, Neeraj. I think since we are in a bull market and a lot of companies and sectors are at all-time high levels, there is a decent amount of appetite to look out for newer opportunities, and particularly from the sectors which have really not participated as much compared to the overall market. So we reckon that because of that, certain new themes, particularly in the broader market, in the mid-cap and the small-cap space, this is being seen. Particularly real estate, though the sector as a whole has been up almost about 92%, contrary to what most of us believed what's really happening at the ground level. But there's a sense that the bigger players would stand to benefit, and particularly for some of the companies like Godrej Property and Sobha, the response to some of the new schemes which they have launched, both for the residential as well as for the commercial, has been quite good. So, market participants are building in a case for a significant re-rating of some of these pockets which have kind of not participated as much in that rally, which is quite a normal phenomena in a bull market.
Okay. So we'll talk about some of your ideas, but Hemang, the trend as we see it, while the larger stocks are consolidating, the mid cap and more than that, the small cap is moving up at an real fast pace. Does that kind of worry you, or you think this is kind of showing the confidence and large caps will soon catch up maybe in next month or the month after that?
I think this has been the trend that we've seen over the last 2 years, that you see a lot of action in the broader market, and eventually even the large cap catches up. Except for the fact that 2 important sectors, IT and pharma, which also contribute significantly to the index, have not participated as much. So when you look at the index per se, it will give you a sense that it hasn't really participated. But if you leave aside these 2 sectors, I think, even large caps have done, pretty well, particularly the consumer-oriented names in the large cap space. So I'm not too worried about the move that we are seeing in the mid cap and the small cap space. And the reason why I'm not worried is that a large part of this up move that we are seeing is on the back of the mutual fund buying because of the kind of inflow that we are seeing. And if you look at the quality of the stocks, I think by and large it is good. So I don't think that one should really worry too much that the mid cap or the large caps are moving up compared to large cap. But in a bull market, you will see that some of the mid caps and small caps actually giving you far higher returns compared to the large cap or the indices per se.
Hemant, do you expect the money which has been flowing into the Indian equities via the mutual fund route to continue in the coming months as well?
Oh, absolutely. I think this can really increase over a period of time because though in terms of absolute numbers, when you look at it, it may look that, okay, we are, getting somewhere close to about 20,000 odd crore, through mutual fund route, about 5 odd thousand crore through SIP, and the rest of the amount through, the lump sum route. But if you look at the penetration, still it's much, much lower at about 3 odd %. So there's a long way to go in terms of the, increase in the penetration. Also the fact that there's a fair bit of awareness and lack of any meaningful opportunities at the retail level in terms of the real estate or any other asset class. So I think that, this is a long-term trend in terms of retail money moving into the equity through mutual fund route, and it will continue for, let's say, next 3 to 5 years.
Hemant, now, I was referring to those 2 or 3 pockets which are moving around, but before we talk about that, just want to scratch your brains a little on a couple of developing themes and how would you play them. So the first one is this whole data explosion, right? I mean, everybody needs more data, and per person consumption of data as well as the overall number of users who will consume data in India is slated to grow at an exponential rate. Now that is a known fact. The question is, how does one play this via the equity markets? Have you done some research here? Is there something that you would be ascribing to your clients or even buying into your money managed portfolios?
See, Neeraj, the data, potential or the growth opportunity because of the, explosion that we are going to see on the data usage. What we believe is that the large cap companies, particularly the data providers, so somebody like a Reliance Industries through Rel Jio and Bharti are the basically, prime, guys who are going to get benefited because of that. So we have looked at these two and we think that there's going to be a significant re-rating both for Rel Jio as well as for Bharti because of the way they've gone about maintaining their market share, particularly Bharti, and the way Rel Jio has gone about acquiring customer base, and we expect a significant improvement in the ARPU from 150, 160 to somewhere in the range of 200 to 225. And we think that the best way to participate in this particular space is to buy Reliance Industries, though it has gone up about 60-65% in the last 12 months. If you look at the growth in terms of earnings and the valuation, still it is cheap compared to the overall market also with a much higher earning visibility. Same is the case with Bharti. Still they have been able to maintain their market share to a great extent and more importantly their ARPUs and margins. So we think that these two are the best players. There are some more companies in the mid-cap space also like Sterlite Technology, I guess, and few more, but we haven't done any detailed work on those. So I would not be able to put out any specific buy recos here.
Okay. 2 pockets, Hemant, and if you have a favorite here, actually one of them I know, the T counters, you're bullish here.
Absolutely. I think the way the globally tea prices have moved up and even in the domestic market, the fall in the production and the consequent increase in the prices, we are looking at about 5 to 7% increase this year and about 15 to 20% increase next year. So the largest tea company in the world, McLeod Russell, is something that we like, though this sector has been in the limelight for a while. The stock has run up. But broadly, just to put things in perspective, still at current price, this company is available at a PE multiple of about 6.5 times FY20 earnings. And there is going to be a significant operating leverage in play because 45 to 50% of the cost is in the nature of fixed costs or employee costs which will not go up as much. So there is going to be a significant improvement in their operating profit over the next couple of years, and the stock is available quite cheap. So I reckon that this could be one of the good investment ideas to invest in for about 20% kind of an uptick.
Hemang, what about your second idea? The gas distribution companies have been doing well in the past few sessions, and I guess you like Gujarat Gas there.
Yeah, Gujarat Gas is something that we like in terms of the industrial distribution space that they are into. They are expanding their geographical base, and though this quarterly numbers were not so impressive because the margin pressure was evident, but we think that now these gas prices internationally are going to come off, because the entire up move that we had seen was a short term because of some events which were there. So we think that these margins will bounce back, and here is a company where you're looking at a volume growth of about 10 to 12% over the next 2 to 3 years. More so because the way the crude prices and the fossil fuel prices have gone up, there is going to be a stronger case for the usage of gas. And Gujarat Gas and to some extent some of the other companies like Petronet, LNG are extremely well placed in that kind of a scenario. So we like Gujarat Gas also for a 15 to 18% kind of an upside.
Okay. Hemang, we'll leave it at that. Thanks so much for taking the time out and joining us today. Good having you, as always.
Thanks, Neeraj. Yeah.
That's Hemang Jani with his thoughts. Okay, and mid-cap management, not really buzzing today. Volumes are fairly thin too. But the interesting thing that happened in the counter that I saw recently is that amongst other investors, Vijay Kedia, a noted HNI, and Malabar Fund have picked up a significant percent, over northwards of 5 lakh odd shares, I think in a plan that was designed by the company itself as well. Of course, the company's had a beautiful run in the last 12 to 18 odd months. To talk about how the business is shaping up currently and what the outlook looks like, we're joined by Mr. Pramod Khera. He's Executive Director at Repro India and joins us on the phone line. Mr. Khera, good having you. Thanks so much for joining in. Unless I'm very wrong, this was a company planned fundraising. Why was this fundraising done?
Well, a couple of reasons. One is that our business, the new business that we have launched, which is the book distribution business, that is ramping up pretty fast. And we are seeing an opportunity here to capture a large share of the online book distribution market. Now, to really cater to the demand across the country, we need to set up print-on-demand plans in different parts of the country. And also we need to get aggressive on marketing. So we thought that if we're comfortable on the fund side, then we'll be able to aggressively grow this business.
Okay. So if I'm not wrong, when we had a conversation at the start of this year, financial year, you were talking about expanding the Mumbai capacity to 8,000 books. You were talking about bringing up Chennai and Delhi. What are those plans? What stage are they at? And what are the fresh plans? Where all are you looking to set up centers or factories?
Yeah, right. So those plans which I discussed around 6 months back, those are on track. Mumbai, we have started the investments. Chennai should be up and running by Q1 2018. And Delhi by, say, the third quarter of next year. So in addition to these 3 plans, we also would like to get into newer formats of print on demand. For example, today, when we do color books on print on demand, they are quite expensive. However, now technology is available to do the color books also quite cost effectively. So we would like to invest in those type of machines, plus also hardback and variable printing. So these are some investment that we'll be doing in our Mumbai plant itself. And coupled with these 3 units in Chennai, Delhi and Mumbai, we would also be investing in warehouse capabilities, because there are certain books, while we do a print on demand, depending upon the traction on the ground, we pre-print certain books and keep them with us so that we're able to fulfill the demand faster. So for that
but I thought you are equipped with the technology of printing it at 24-hour notice, and which was the whole idea that you would be asset light. Why would you need to set up these warehouses to store books? And would these 3 factories be the only factories, or would you set up more factories?
So right now, plans are for these 3 factories only. See, warehouses, why we need it? Because when a book is selling very well, suppose we're doing, say, 100 copies per day, that means we can foresee that over the next 15 days, we can sell around 1,500 to 2,000 copies. Now, instead of doing them on demand, one book, we pre-print them, then the cost comes down significantly, and the load on one book machines also reduces. So for that, you require different machines, which you already have, and which we use for pre-printing.
Mr. Khera, are you looking to raise any more funds now?
No, there's nothing in the pipeline right now.
Okay, I just want some clarification. We were interacting with a couple of paper companies, and there's news that paper companies could be increasing prices in the month of December. Reason being because the pulp prices internationally are going up. Does that impact you? Because I believe that's your raw material.
Well, see, we being a printing company, the paper is used as an input cost, and definitely it impacts us. However, the publishers for whom we print the books, they are also quite well versed with the fluctuations in the market prices of paper, and this cost is a pass-through cost as far as publisher is concerned. So if there's an increase above a certain percentage, we pass through that cost to the publishers, to our clients.
So that's not going to impact your margins at all?
No, it won't.
Okay, any new orders that you're looking, or you've bid for any new orders?
No, so see, the printing business is quite steady. It continues. We're not looking at growing that. What we are looking at is growing our distribution business. So that's where we are adding more and more publishers on the list. We're acquiring more titles so that we're able to sell more, and we're able to sell a full catalog for the publishers.
Just a last question from my side. A word on the export business. How is that looking?
Export seems to have now slightly picked up in the last quarter, and for the Q2 we had an opening order book of around 16 crores, which is looking good. So let's see how it pans out for the rest of the year.
Okay, so would it be safe to assume that starting FY19 your total capacity will be what, 12,000 books per day? Is that a fair estimate?
On the one book, it would be more than 12,000 because it will be, if you add the Chennai, Delhi, and the
Mumbai
color book capacity plus the Bhiwandi capacity, it'll be anywhere between 16 to 20,000 books per day. Okay.
And what's the current run rate, Mr. Khera, that you are at right now in terms of capacity utilization? Because I remember, unless I'm very wrong, in April or May, you had hit about 2,500 odd books per day. Is my number correct? And what's the scene?
It was around 2,000, and by end of July, we had touched 3,000.
What's the current run rate?
Current rate is over 4,000.
Over 4,000 books per day. So you probably have another room to go before you exhaust your current capacity completely.
That's right.
For about 16,000, I believe you said, is the current capacity.
Correct.
When do you reach full capacity, Mr. Khera? At the rate you're growing, you could probably do this, middle of next year?
Well, we're hoping for that. Let's see.
And would you need to increase capacity post that?
This is an ongoing process. So as the business grows, yes, we will have to look at, and then at that stage, maybe end of next financial year, we might look at something in the east.
Okay, end of FY19, you are saying?
Yeah.
Okay, until then, you will be happy with this 16,000 books per day capacity?
16 to 20,000 books is the capacity.
16 to 20,000 books per day. Okay, great. Mr. Khera, good having you. Thanks much for taking the time out and joining us and giving us that perspective.
My pleasure.
That's the ED of Repro India speaking about the capacity expansion plans and what they will do. They've allocated some shares and raised some funds to some marquee investors. Do watch out for this one. The management commentary fairly buoyant. Okay, what else? Let's talk about some stocks which are in the spotlight today. Glenmark, for sure. I remember Pradeep speaking about this in the morning though. And Pradeep, was there a reason why you brought that up? Had you seen something on the charts then, and are you bringing it to our viewers now?
Definitely, that's the case, because even yesterday I was kind of surprised that stock didn't really fall as much as pharma stocks normally react to any news coming from US FDA. And if you look at it, this first up on your screen is a quarterly chart, which is actually starting in 2009. So here was a bottom from where the stock started to move up, and then it kind of peaked 2 years back, and after that we have seen a correction. What is interesting here, what we have drawn is actually Fibonacci retracement levels, and if you look at these levels, this is 23, 38, 50, and this is 61.8%. Now this level is significant because we have reached very close to the 61.8 retracement, and this is usually a very strong support level. We did find some support around in last quarter as well, and now if you look at it, in this quarter again we have reached exactly there, and there could be some support. What is also interesting to note, if you look at the volume charts, you can see that volume is actually declining. So there was significant selling pressure in June quarter. That was the worst quarter for the stock, but thereafter the selling volume has come down. So maybe a lot of people who wanted to exit have already exited that, and we have reached a strong support level. Now how does it look in the near term? Are there some more indicators? If you bring the weekly chart, you'll be able to find some more reasons that kind of tell you that probably we are close to a support. Now if you look at the movement recently, that is from June till date. Now if you look at the movement over last 5 months, this stock has been kind of making newer lows. Every month, although there is no major breakdown, but we do hit a newer low, and it goes to a new lower level, while on the RSI, that is here right at the bottom, if you see, it is actually making higher lows. Now if there is a scenario like this, when the momentum oscillator is actually making higher lows, but the stock is making new lows, and they are moving in different directions, we call it a positive divergence. Now what it tells you is that probably there is not much strength in the current trend, which is negative. So if the fall is losing strength, which means the stock should bottom out and it may move up. It's a very early indicator, so to say, but definitely there are signs that Glenmark has probably reached a strong support level and it may bounce. It would be risky to short here, but to go long, definitely this is going to be a high risk trade for a while now. We'll wait for more confirmations, but this is an early indication that probably we are at the bottom, and as we tell you every day, this is not a recommendation to buy or sell.
Yeah, but it's an interesting chart pattern that Pradeep has brought out, positive divergence. Do watch out for this one in the session today. Pradeep, any chance you recollect the stock that the Bloomberg terminal was indicating today this morning? Bharat Financial, was it?
I think so, yeah.
I think it was Bharat Financial, and I think it was trended. I just want to look up
that was
the
a buy
stock price
call,
of Bharat Financial as well, and just see the intraday as to what happens there too. Remember, chalk and cheese, what Pradeep is saying and what the Bloomberg terminal indicator is saying is completely different. I'm just trying to gather some stuff that we've done during the course of the day and trying to bring to our notice. But watch out for Glenmark in particular. Standard comment, as Pradeep said, not a recommendation by any stretch of imagination. Stock marginally off from the highs of the day, and that can be said for the market as well, or marginally in the red currently. It's been yo-yoing between the red and the green, but lying extremely flat in the session today. Hey, TV18 is back up in the green, Navneet.
It is?
Yeah.
It's still in the band though.
It's just moved up a little bit in the session. I saw
Actually,
it
media stocks, Neeraj, have been doing well. I think today was the day for Hathway. That was up almost 7 to 8%. Let's just pull up and see if it's still sustained. Oh, it's up almost 11.5% at day's high. So Hathway is doing well in today's session. And off late, media stocks have been doing pretty well. But let's move on. Lenders now have enough tools to deal with the NPA mess, says Chanda Kochar, speaking to Tamanna Inamdar on the sidelines of the Global Entrepreneurship Summit in Hyderabad. The CEO and MD of ICICI Bank says it's important for banks to find a buyer while the asset is still in running condition, not an idle facility. Listen in.
When you talk of NPAs and stressed assets, we must remember that there are 2 or 3 parts to it. One is about recognition of NPA, the other is about resolution and then recovery. I think as far as recognition is concerned, the country has come a long way. You know, a lot of the stressed assets have already been recognized as NPA. And while I'm not saying that there will not be new NPAs as we go along, but if you look at the banking sector, the additions to NPA, even say, you know, for a bank like us and in general, the additions to NPA, the rate of additions has been coming down in the last few quarters. But I think what is more important is to focus on resolution so that we get the right recovery in the most productive manner out of those assets. And there again, you know, a lot of the enablers have been put in place. To start with, it was the various RBI schemes of enabling change in management, doing deep restructuring and so on. And then now the latest thing about the bankruptcy code, about the NCLT, you know, which actually would enable that decisions are taken on time, that the decisions have a judicial cover, so the banks are also, you know, enabled in their mindset to take decisions. So I think things are moving in the right direction. Well, we do have a lot of work to do in ensuring that the resolutions happen on time, that the banks take decisions on time, and that we resolve assets while they are working productive assets. Absolutely. And not lose value.
So do you think it's a good idea to keep the promoters out?
Well, I think, you know, it's about saying that, you know, is it a big deterrent for future companies to become NPAs? I think it's a big deterrent in that sense, you know, to allow companies to become NPAs going forward.
Just one last question. The GDP numbers are expected sometime this week. Do you have any view on whether we will see an uptick, the worst of GST, etc. is over?
Well, I think, you know, I'm not commenting really on the number. The number will be out. But what I'm seeing is that a lot of the high frequency indicators are showing an uptick. So you saw that exports, you know, September, October actually showed a much bigger improvement. Things like commercial vehicles, which were in the negative territory beginning of the year, are actually now in a good positive territory. Vehicle sales continue to do okay. The IIP is also showing now an improvement compared to the past. So I think there are a lot of those positive impacts. The government spends on roads and railways is actually creating a multiplier impact. And as you see some of the bigger things like affordable housing, you know, those projects picking up, I think these projects also create a huge amount of multiplier impact. So without talking of the specific number, I would say that, you know, a lot of the things are moving in the positive direction.
It's interesting, you don't normally see Chanda Kochhar speak about these things and the NPA resolution process and otherwise. And of course, speaking about those promoter entities too. However, full tilt towards the day's trade, bunch of stocks moving around, a lot of stocks at new highs for themselves. Sobha is now 8% at 580, Shankara Building is 8% at 1910, and Pratap Snacks is above its, I think, issue price yet again. So 1285 for Pratap Snacks. So, good time to get in. Kunal Saragi, CEO and editor at Equity Rush, joins us right now on the show. Kunal, good having you. Thanks much for taking the time out. Is there a trade on the index that you have, Kunal, as difficult as it sounds right now?
Well, I think although Neeraj, markets have been very tepid for the last few trading sessions, and the action really is outside of the index. But if you look at the index, I think overall trajectory remains positive. As long as Nifty is above 10,280, I think the bias should continue to be positive. So of course, if you can withstand the choppiness that we've been witnessing last few sessions, and the sheer frustration of actually watching the markets operate in a very narrow band, I think the overall trajectory remains positive. One should continue to have long positions with a stop loss somewhere around 10,280. I think the next level for the Nifty is 10,450, but I don't really know when we'll actually get to see it.
Let's also bring in Hadrian Mendonca, a senior technical analyst at IIFL, who joins us on the show now. Hi, Hadrian. Good afternoon. How are you approaching any sort of trade on Nifty or Bank Nifty, considering it is the expiry day tomorrow? Any strategy that you're working out on?
Yeah, hi, good afternoon. Actually, things are getting a little difficult in terms of trading. The moves are very small. In fact, the gentleman on the other side, told that, tepid moves are happening in the past 5-6 days now. Small observation, but it might have a larger impact on the overall market. It is the first time that Nifty has not, unable to surpass its previous day's high. That means this is the first time in 8 days Nifty has not hit, its previous high. And second observation here is that it is the third straight day Nifty could not close above. In fact, the fourth straight day Nifty could not close above the 10,400 mark. So all these things are actually indicating that we might continue to grind around these between this narrow trading range. In my opinion, if there is going to be any kind of fresh up move, it has to come with a gap up. If there is no gap up, I'll find it difficult to actually put a trade on this at the current juncture. Given the expiry, I think only a gap up can actually save the Nifty, and it can aid the Nifty to head towards the 450, 460 zone, going forward. So the overall strategy does not change. So the strategy remains the same. Any declines on the index should be an opportunity to buy. But this trading range has to be broken on either of the sides to actually get a directional trade.
Adrian, then where exactly are you focusing right now? What are your trading picks?
Yeah, currently, we're bullish on two stocks, and again, these stocks are out of, the expiry list. So first is Bombay Dyeing. We are pretty bullish on this stock. They're pretty steady. Both these stocks are pretty steady, Bombay Dyeing and APL Apollo. So Bombay Dyeing currently is, trading in a very, very, strong trading range, and it is maintaining up itself above its 21-day moving average. So these are two positive points. The volumes have picked up pretty well. And I think one can consider buying Bombay Dyeing at these levels. Can play for a target of 221 and keep a stop loss of 209.5. Second stock is APL Apollo. The stock is another steady stock. If you see, the stock does not move. It's low on volatility, low on beta. But just to safeguard the traders from any kind of high volatility because of the expiry, APL Apollo is well placed for a trade here. One can consider buying APL Apollo at these levels for a target of 2050 in the near term and keep a stop loss close to 1895.
Kunal, what about you? What are your top trading strategies?
Well, bunch of stocks that I think one can still go long on. I think IT stocks are now beginning to perk up, and some of them have actually broken through major resistances. Hexaware is one stock that has done well in today's trade. I expect the move today to continue. I think 345, 350 might be actually gettable here. So from a very short-term expiry perspective, I think Hexaware can be looked at. The other stock I like is Jet Airways, which has a very strong, which had a breakout, but then it came down, and now it's, I think, beginning to resume its uptrend. So with a stop loss at around 660 makes for a good buy. I think the stock should get to 700 eventually. So these are two stock picks that one could look at.
Adrian, one stock that Neeraj pointed out earlier was Bosch. If you look at it, volumes are at least 4 times compared to the average volume that we see at this counter. And this is a stock where, only a big investor or investors can move the needle. Is up 5.5% today. What's your call?
Yeah, Bosch is definitely, showing very, very strong move. In fact, we had seen a very, very big symmetrical triangle breakdown in the stock 2 weeks back. Since then, the stock has, drastically, fallen. But if, on the other hand, along with the fall, we have seen volume also increasing slowly and gradually. So these were indications actually that we may see some kind of bounce back, which has actually come in today with significant volumes, as you already notified. So I think Bosch should be a very good candidate from here on. Although only big investors can actually get into such huge stocks. I think definitely good time, bargain buy. In fact, if I may word it the right way, Bosch one can consider entering at these levels, and the space is open up for close to 21,500 if the current momentum carries forward.
Okay, Bosch is one of your top gainers when it comes to Nifty today. But Neeraj was talking about Pratap Foods. You've also got ADF Foods. That stock has surged almost 15%. Remember, the earnings had come yesterday and it's been a strong quarter where the company posted bottom line figure of almost 5.9 crores. So ADF Foods up almost 15%. And in just last few minutes, just pull up the intraday chart of Sickle Logistics. That's gained almost 11 to 12% in trade. And I guess a couple of other logistics stocks have also seen good gains from the likes of All Cargo. We've seen VRL Logistics also moving up. There you go. Sickle Logistics is up 12%. Let's also pull up All Cargo, VRL Logistics, as well as Gati and see if there is any rub-off of impact seen on the sector. VRL is up almost 1.5%, and Gati is too off days high, but still trading in the green. But let's put the spotlight on Sobha. The stock has surged after it announced a luxury township in joint ownership with Purwankara. Neeraj has an analysis on what the Bloomberg terminal is throwing about. Neeraj, clearly the stock's been active from the word go in the morning.
Yeah, it's been active, and you know, amongst this whole conversation of affordable housing companies doing well, it's interesting to see that real estate stock has gone up on an announcement of a luxury housing project in partnership with another company which has been doing quite a significant amount of work in the affordable housing space as well, which is Purwankara. But so we just thought we'll put some perspective on the different facets of the company via using the terminal. One, the consensus rating, and I think almost everybody has a buy call here. Keep in mind though, the average target price of Sobha is, which is about 540, is much lower than the current market price. So it's probably priced itself out a bit after a move, but with a lot of these companies, I think the real valuation will be at the end of this year's results, and then we'll get to know if indeed how much is the price to earning multiple getting revised by. Because if you look at what Sobha did this quarter as well, there was a return to volume growth. The management expected double-digit growth over the course of the next couple of quarters as well. So they seem to be getting back to the growth zone after having a few quarters of fairly tepid growth is Sobha. Valuation, yeah, naturally it would move up with the kind of price rise that has gone up, but the earnings for Sobha too have gone up a little bit. So as I was saying, that you need to really wait for FY18 to shape up before really talk too much about this one. Just one last bit, the volumes have gone up today. The average volumes for Sobha really haven't been that great. So if you look at a Kolte Patil or some of the others, you'll probably see this blue line trending up as well. In this case, the blue line, which is the average volume for the last 20 days, is okay. But the others, today's volume numbers are much, much higher for Sobha. It's more a case really of some people taking notice of the valuations of Sobha vis-a-vis some of the others. It is to an extent relatively cheaper compared to some of the other players. But let's pose that question to G. Chokhalingam. He joins us right now on the show. Mr. Chokhalingam, thanks for joining in. I think we've spoken in the past about you not being too comfortable with all the real estate plays, but what about Sobha developers, or for that matter actually Purwankara?
Purwankara I haven't studied, but Sobha definitely I looked at it. If you look at the September balance sheet, the inventory, receivables and other current assets running into around 7,000 crore, which is several times the annual sales. So this balance sheet gives me definitely a lot of concern for me. Normally I don't invest in that kind of balance sheets. One possible reason is that the floating stock is very low. If you exclude promoter and FII stake, so what is left in the market is very small. So therefore, I would advise caution for the retail investors.
Okay, Mr. Chokhalingam, you must have looked at the code sharing agreements that Jet Airways has announced today. Now, stock has moved up quite a bit. Some of the analysts on our shows have given sell calls, or at least a profit booking calls on this stock. Do you think this agreement would significantly alter the earnings going forward, and the stock will get further upside?
Short term, I feel it should correct quite substantially, because in fact we initiated around 500, below 500 we bought aggressively. At around 660 we closed our call and we sold the stock for simple reason that oil price has bounced almost to 40% from 2017 bottom, which is going to be terribly negative for this company. So when September results are out, I expect some stress. So I agree with you. In the long term, among all the airline stocks, I would prefer Jet Airways, because I am quite impressed by the kind of privileged customers they have got. Because despite the premium charges, these privileged customers are there with the company for long. So which is more durable as compared to other airlines, which are banking on the cheaper tariff. So that is always a very doubtful whether one can hold on to such market share. So therefore, in the long term, among entire pack, I would prefer Jet Airways. But certainly at this price, I am not comfortable because the results would be a little bad. In fact, if you take 2016 bottom, oil price has gone up by more than 100%. So definitely there would be stress in the short term. So I would advise if the stock corrects anywhere around beyond 10 or 15%, then definitely one should look at Jet Airways.
And what are your thoughts on SpiceJet? The company set up a subsidiary to foray into real estate business. What are your thoughts on it?
I would not be enthused by foray into real estate. This is also a good stock, definitely. As I said earlier, I believe the airline industry is going to be a very long-term story because of service sector accounting for 65% of the GDP, middle-class population, student travel, NRI remittances, foreign tourist arrival, which is getting you more than a couple of $1 billion every month. So all this would augur well for airline. But as I said, I would wait for even December results before accumulating these stocks, because I definitely feel September and December results would have a lot of stress because of oil price hike. So one should accumulate only after seeing the December results.
Look at Shankara Building Products. Pradeep never forgets to mark this whenever he sees it higher. Pradeep, it is now up 11.5%. And this is stuff that dreams are made of. Frankly, if you're an IPO investor in Shankara Building Products, you probably don't need to look ahead. Let's bring up the 1 year chart or YTD chart of Shankara Building versus Avenue Supermart. And Shankara, in a manner of speaking, has the retail flavor, right? Because while it's a building products thing, it's got these retail stores. Look at what Shankara Building has done this year, 210%. And I think there's some bit of a rally that it happened maybe in the previous year as well. But you would guess post-listing, Avenue Supermarts would have done similar kind of a performance. Actually, no, not even that much. So a 12-month period, while we talk about Avenue Supermarts as the poster boy of retail, and of course, Future Retail has probably done much better, but this one has not been far behind, guys. 200% for Shankara Building. And it's just the question mark is only whether their earnings will grow at an exponential rate to make the price to earning multiple look a lot more reasonable than what it would be right now, because this has been a surreal run for Shankara Building Products for sure.
I think around 25% move is what we have seen over the last 3 days itself. So a lot of that has in fact come on top of the outperformance that was already there. So this newfound excitement, I think a lot of people are entering now at current levels, and what should we expect here on is really a big question. Mr. Chokalingam, are you... Sorry.
No, I was just saying, just corroborating your view, Pradeep, at about 1500, the stock used to trade at 17 times FY19 EV EBITDA and about 15 times FY20 EV EBITDA. And I would presume this was at 1500, at 2000, those multiples would have expanded significantly. Now, FY20 EV EBITDA, I mean, it might be wrong, but I would guess it would have moved up by at least 200 to 300 bips, if not more. So that's a substantially highly valued company. Just the fact that people would believe that their EBITDA numbers will move up substantially, and that will make the EV EBITDA multiples start looking a lot better once we hit the next year and you start looking forward. Somewhere around this time, you will start looking at FY20 numbers, and maybe that's what people are.
What is also interesting is, there are 8 analysts tracking this stock on Bloomberg, and all of them have a buy call. Though the price target is around 1638, so we have gone beyond that. Let's see how these analysts really, maybe alter their recommendations.
Yeah, it's expensive. It's expensive without a shadow of doubt. At 1400, 1500, 40 PE, currently at whatever, 55 PE. Not as expensive as Future Retail, but certainly expensive. But yeah, Mr. Chokalingam, Pradeep was trying to ask you about Shankara Building. Any thoughts here? Actually, any thoughts on Shankara versus some of the other retail names as well?
No, I already answered my question actually. 55 PE on current year. This is what happens, thematic bull run every time when bull market happens. We have seen it with logistic company Gati going to 330, then coming back to 110. It's a very sad. I mean, I don't find any valuation comfort at all at 55 PE. So Indian economy is not rising the way the market is rising. Even same case with other retail ventures. you are trading at even 90, 100 PE, which is, according to me, not sustainable at all. There is no liquidity to, absorb this kind of market caps. The market caps to a large extent remain only illusion. The time only would prove, whether the illusion becomes a reality or it fizzles out.
Very interesting. Shankara Building is certainly in the thick of things. What else? Uniply has had a good move today, 10% higher, 446. That's trading at new highs for itself. And both Bhansali Engineering, Polymers has done well. Ineos Styrolution has done rather well for itself. 8K Miles is now nudging the 1,000 mark, so that's doing okay. And Apex Frozen Foods is up another 5% in trade today. Hadrian, two names, if there is a trade possible at all. One of them is Shankara Building. The other one is...
Can I add a new listing to that? Capacite Infra has also gone up 11 to 12% in the last 10 to 15 minutes. If you could just pull up the chart. There you go. It's trading at days high. So these are both new listing at these levels.
I don't know if Adrian has charts on Apex and Capacite too. So Adrian, those two. I'll add to that a Shankara Building, which is also, in a manner of speaking, an IPO, a recently listed name, if not a freshly listed name.
All these stocks have been on a tear, Neeraj. You guys had a long debate on the valuations of Shankara. It seems to be on the charts also. Despite such a strong move, there is a huge diversion that I see. And that diversion actually indicates that we may see a wee bit of profit booking in Shankara before we could see any kind of fresh up move. That does not mean that I am bearish on the stock. The strategy should be buy on declines, because going opposite to the direction is not something that one should do. So I would say that wait for a decline before you enter into Shankara once again. Anyway, close to 1700, 1750 should ideally be a good trading range where you can enter Shankara. But I think if you're holding, makes no sense to exit or book profits at all at these levels. You can continue to hold long positions.
What future retail, Hadrian? What level do you see there? Stock has corrected quite a bit over the last 2 to 3 days.
Yeah, future retail, in fact, should be ideally good levels where one can, again enter at these levels. We always say buy on dips. So, this is the kind of dip that we are talking about when we get stocks like future retail. Such good trending stocks, we get such good declines. So, good decline where one can enter at these levels, and one can once again play for a target of close to 640, 645 if this current move, continues to being carrying forward.
Okay, stay on, Jeman. Lots more to talk about, but at the curtain raiser, I mean, it's all mid-caps, all about mid-caps, and at the curtain raiser of the Motilal Oswal Mid-Cap Conference, Bloomberg Quint spoke to market veteran Rajendra Rajgaria, MD and CEO Institutional Equities of Motilal Oswal Securities, and he believes that there are more opportunities in the broader market. There's a lot of money to be made in the mid-cap space as well. Let's hear him out.
The mean reversion on valuations will only happen if the mean reversion on growth will happen first. So if you look at today Nifty, for example, right, the Nifty aggregate earnings growth has hardly been anything, and that constitutes of the top 50 companies of the country today. The last 7-8 years CAGR of Nifty has been just about 2-3%, while there are many mid caps. In fact, many of the 5-year-old mid caps have today become large caps, which have grown their earnings at 25-30%. So I think as the country keeps on progressing to add $1 trillion of GDP every 2-3 years, you will see some models being getting benefited immensely. They of course start with mid cap, but then on the journey they become large caps. Look at the Nifty composition today. The entrance and the exits itself signifies the changing trend into the market. So coming to your question, should one raise exposure to mid cap? I think it's more of a function of should you raise exposure to growth or should you be value focused today? We are more growth focused, and that is where mid caps offer more value today.
What are some of the most promising ideas according to you and your research team?
So, if I were to bracket our top ideas in the mid cap in the categories, we think now with both the Demon and the GST event behind, some bit of economic upcycle happening, we will see many of the discretionary companies doing up very well. In fact, our Strategist just released a report last week where he articulated how rural itself is going to be an important driver for kicking up the consumption trends into the system. There are many names to play through them. Second, we also think that many of the financials, be it both into the banks and into the NBFC space, where valuations are far more reasonable. Whether you look at some of the new private sector banks or some of the NBFCs which are coming out of a stress. Names like Shriram Transport, Repco, many of these have not fully participated in the whole NBFC rally over the last couple of years. While the incremental trends for them are getting more positive, you should see things picking up for them. Then you have several mid-cap autos. Look at mid-cap pharma, for example. While the overall large caps have failed to deliver any growth or any return over the last 2 years, many of the mid-caps have been doing well. Yesterday, my analyst has upgraded Alchem Labs because he thinks that the next 4 quarters growth for them is going to be a lot better than what the other biggies in the sector are going to offer. So I think within each sector, you have specific mid-caps which are going to do well. But from a theme point of view, I think consumption and financials remain the 2 core themes where several mid-caps are there for investors to invest in.
Well, you mentioned financials as one of the key themes that you like. I don't see very significant representation from that segment.
Yeah. So in this conference, we have limited financials. We have, in fact, a couple of NBFCs. We have Capital First. We have Mass Financial Services, right? But from an overall house point of view, we have a very favorable view on many of the financials. They may not be as a part of the conference list today, but then, from a research desk, we are very positive on many of them.
Clearly, you are not really worried that, PSU banks will manage to fight back in 2018 and therefore these NBFCs will probably lose some business.
Well, I think 2018 would still be the year when many of these PSU banks will be more focused to do the final round of cleanup of their books. Any growth for them is likely to return only towards 2019. And this country will still need massive credit. Our credit growth in the system is still in single digit. So I think the PSU banks, once they come back into a growth mode, will help to expand this market further. Secondly, if you look at most of the NBFCs, at least the ones that we like, they are very product focused or their sizes are still relatively small. So there's going to be a big market available for everyone, right? And as you start seeing an economic upcycle, some bit of capex feeding back into the system, you will see demand happening for both set of players. But yes, the NBFCs are the ones which have built far more efficient models to grow their book more profitably and in turn get much better valuation than what the rest of the banking system gets.
All right, it's that time of the show when we get you the Fab 4 stocks of the day. And to take us through the same as usual, Yash Upadhyay joins us. Yash?
Good afternoon, Navneet. So Technofab Engineering comes first on our Fab 4 list, and the stock is up as much as 20%. In fact, it is locked in a 20% upper circuit after the company said that it has won an order worth close to 280 crore rupees in the domestic water segment. Now, the project will be funded by the Asian Development Bank, and with this order, the company's overall order book stands at around 2,000 crore rupees, with water segment contributing to almost half of it. So, good news for this one. Kakatiya Cement is also on our radar. The stock is up about 7.5% after the company came out with their second quarter results just a while back, and it was an operationally strong quarter for the company. And the key number that I'm looking out for is the EBITDA number. The EBITDA figure rose 4.8 times on a year-on-year basis, with margins too coming in at 20% versus 5% for the same quarter last year. So good news for Kakatiya Cements. Powermech Engineering is also on our radar. The stock is up about 4.5% of the company said that it has received an order worth close to 350 crore rupees for the under the Make in India scheme from the government of Andhra Pradesh. And lastly, on our Fab 4 list is Bajaj Corp. Now this one surged close to 11% today, the most since April of 2016. In fact, the stock is up for a fifth straight day, this time fifth straight trading session, and with volumes coming in substantially higher, close to 14 times the 20-day average.
Okay, Yash, thanks a lot for bringing us all those details. Let's get some technical check going for stocks which are buzzing in today's session. Pull up Granules India. That's been a counter which has been strong since the morning session today. It's up almost closer to 6%. Kunal, on the charts, does today's move indicate any sort of fresh breakout on the charts for Granules India?
See, that will have to wait, Navneet, although there's a big volume breakout for sure, and I think that points to something. But the level that I'm watching out for is 135. The stock needs to not only trade above that level, but close above 135 before you can actually go out and buy the stock. The next resistance in that case would be around 146. So I'm still waiting and watching in Granules, and I'd buy it only if it manages a close above 135.
Okay, so that's the call on Granules. Let's look at some interesting stocks which are moving up. You talked about Shankara, but look at Capacite Infra. Also look at Hathway Cable. These two stocks have also done well over the last few minutes. On the flip side, you have Relaxo, which has corrected some 3%. You also have some stocks like Tata Coffee and Jacob corrected. So maybe a few stocks that had moved up over last few sessions are now coming under some kind of profit booking, although there are many more which are moving up. So some amount of churning, maybe that is what we really see in this market. Jacob is an interesting stock which moved up quite a bit over last 1 week. In fact, Mr. Chokalingam, do you track this stock? Do you have a view?
Yeah, in fact, I was recommending strongly for last 6-7 years, ever since it crashed below 50 level. Long term, it's a good stock because it has got a lot of land bank in Navi Mumbai. And interestingly, it has got a good chunk of Reliance shares. So the reason for the stock to double in the 2017 is basically the Reliance share itself got doubled. So that also helped this company. Definitely for long-term investors, there is still scope because, as I said, in our estimate, the value of investments in real estate in Navi Mumbai could be worth about 2,000 crore roughly. So therefore, plus you have Reliance shares. So if there is any significant correction, one can buy. Otherwise, those who bought can hold. In the long term, I am sure there can be further upside.
But is your premise, Mr. Chokalingam, based squarely on the quantum of land bank that this company holds? Or can it do some earnings as well? Because the market cap of the company is 3,300 crores.
Yeah. The earnings side, I am not that optimistic because they are into some traditional businesses which are not showing any sign of growth. So it is conservatively, I have estimated the real estate value around 2,000 crore. As I said earlier, if my memory is right, 600 to 700 crore worth of land shares also they have. Plus the traditional business can make about 3-4 rupee EPS. So if you give a 10 multiple for the core business, but then add value of real estate and Reliance shares, so there is another 5-10% upside from here.
Okay. Mr. Chokalingam, what about South Indian Bank? That's the other stock which is buzzing in today's trade. And I remember you've been tracking this counter for the longest time. If somebody has bought the stock in their portfolio, what would you recommend? Should they hold on at these levels?
One should hold on. In fact, as a disclosure, personally, as well as economics invested in South Indian Bank, we are holding for all our clients. Even marginal decline, we continue to buy for simple reason that it is trading at a price to adjusted book value of around 1.6, 1.7, which is still the cheapest, whether you take entire banking industry or you take old period sector banks. And also the business has come back to around 1 trillion rupees. So, and third, the advances is still growing in double digit, which is a very rare phenomenon for many of these banks. And we have already seen 4 banks in the old period sector banking space being acquired in the last 2 decades. So I have been saying for a long time that this consolidation of old period sector bank would continue because the industry growth itself is a poor single digit. So therefore, considering the opportunity from consolidation and also cheap valuation and the business size and credit growth, I have a strong, positive view on South Indian Bank.
Pull up the intraday chart of Adani Ports. It moved higher, I guess, in the last 10 to 15 minutes. But once again, it's come off from those levels. But yet, it's one of the top gainers on Nifty right now, Adani Ports. Hadrian, on the charts, do you see any trade for Adani Ports?
Yes, definitely. The intraday chart that is actually showing is something very significant. There are multiple things happening at the same time. First is it is actually created a double bottom kind of a scenario around the 396, 397 mark. And secondly, if you check another hourly chart, you will see a declining trendline breakout. So both these parameters are actually complementing each other, and definitely this could be a very good buy with a short-term perspective. You can buy the stock at these levels, and definitely you can play for the immediate peak of Adani Ports, that is close to 414, 415. So the risk reward is also in favor of long positions. Definitely a buy at these levels. Keep a stop loss of close to 396.
Okay. Mr. Chokalingam, Eris Life Sciences is another stock that we have been tracking for last few days. Even today, it figures among the key gainers. What's your view here? Do you think there is an opportunity yet?
Which stock you mentioned?
Eris Life Sciences.
No, I have not tracked it. I'm sorry. It is recently listed one. I haven't tracked.
What about Thermax? This stock has finally started to move up. Probably looks like, if you look at the movement over the last 1 week, this has been a big laggard. But do you think the time has come to buy Thermax?
Definitely one can. It's known for a very good management quality, good balance sheet, good business model. So it is just that the infra space has gone through a lot of tough time. So stocks like Thermax, Siemens, they have not done the way other infra companies have done well. But I would definitely suggest a stock like Thermax for long-term investors. One can definitely buy and hold with a perspective of 1 to 3 years. I'm sure within a year or so, the Indian industrial economy as well as infra space would come back to significant growth momentum. So therefore, I would agree with we want Thermax.
Okay, let's talk about the buzzing stock of the day, and I guess Nikki Mirchandani is tracking Shankara Building Products today. Nikki, take us through it.
So the stock is 13%, has actually risen 13% higher, which is its highest level seen in since April 2017. That's when the stock actually got listed. So we're looking at a record high level for this company. In the previous session itself, also the stock rose as much as 8.5% up. The stock now is trading at a premium of around 319% as compared to its issue price. The volumes currently stand at 5 times the 30-day average volumes on NSE. Also, 6 out of 8 analysts tracked by Bloomberg have a buy rating on the stock Navneet, but then interestingly, it suggests a potential downside of 15% for this counter. But then a report from ICCR says that Shankara is an asset-light play on growing a building material segment, and the company right now is in a sweet spot to capture the growing organized home improvement market.
Okay, Nikki, thanks a lot for bringing all those details. While clearly Shankara Building has been trading with significant gains in today's session, and also we've been discussing this counter where the valuations may look a little bit expensive. The price to book is almost 11 times, but price to sales as of now stands at about 1.8 times. Well, the other stock among the F&O world, Shriram Transport, that's seen a significant move of almost 5% today. And I just want to take a technical check before we go across to get some details about the code sharing agreement of Jet Airways. Hadrian, on the chart, Shriram Transport up 5%. I've seen some long build-up coming about on the future side as well. Do you see any sort of trade at these levels? Or let's say if somebody had taken a long position, should they look to cover around these levels?
No, I think, if somebody is holding long positions, you should definitely hold, because there is still more steam left, the way prices are moving currently. The stock is still not into its overbought zone, so that is actually telling us that there is still more space for the stock to move higher. So, we could see the stock moving close to 1350, 1370 in the near term. So, definitely if somebody is holding long positions, there is no need to exit. You can continue to hold long positions because there is still more steam left in Shriram Transport Finance.
Okay. Well, let's move on to Jet Airways, which has inked a new code share with Air France, KLM and Delta Airlines today. Hopes to capitalize on their existing network to increase connectivity. The country's oldest private airline also sees its revenue rise by 40% next year. Purva Chitnis caught up with the CEO, Vinay Dubey, and started off by asking him for the rationale behind the extended code sharing.
The rationale really was our way of trying to find the ability to give our consumers more choices. Our consumers don't want to fly between just Mumbai and Paris. They want to go all across Europe. They want to go all across North America. And they want to do that in a coordinated and seamless manner. A traditional code share allows you to extend your network, but doesn't do it in as seamless and coordinated a manner as this joint cooperation, enhanced cooperation agreement. And so our view is that when you have the ability to plan your networks together, when you have the ability to allow consumers to fly on one airline in one direction and then come back through another airline in another direction, perhaps to a different destination within India, that creates a level of convenience and breadth that I think is unparalleled. And so this is a very unique first in India, and we're very happy to participate in that as Jet.
And my final question to you is, like, with this partnership, what is the revenue that you're expecting, and how much market share are you expecting to grow from here?
So in the calendar year, for most of the calendar year 2017, if you look at Jet and Air France and KLM, we had a combined 7 flights. This enhanced partnership has allowed us to add 3 more flights together in October 29th of this year. So if you look at the revenue base that we will have for the calendar year 2018, it's going to grow by close to 40%. And it'll bring our revenue base in the calendar year 2018 to a total of about $1 billion. And so between 17 and 18, about a 40% jump, making us about $1 billion business between us and Air France and KLM. And that's a pretty big jump. Our view is that this market is growing and will continue for the foreseeable future to grow at double digits. And we hope to grow as fast, if not a bit faster, than the market because of the unique elements that this partnership brings for our consumers.
Okay, markets are back in the green. At least Nifty is now just about trading flattish around the levels of 10,371, and Bank Nifty is just down almost 20 points. So once again, in that last hour of trade, you've seen some volatility coming by. If you could also check where the India VIX is currently, because when we started the show, it just entered, it's off day's high, still down almost 1.3%. So that's a good sign. It slipped below the mark of 13. Since we are talking about the India Volatility Index, let's also look at a couple of F&O stocks which can be in focus for tomorrow's trade. 2 stocks which are very close to the coming into the F&O ban. One of them is IFCI. I know I highlighted this counter yesterday. For a stock to come into the F&O ban, it has to breach the 95% mark, and look at that, it's at the borderline, 94.7. And on the future side, some open interest buildup has been seen. Remains to be seen whether it breaches that mark today or not. But Granules India, do watch out for that counter. I've been highlighting it in the last few days, where the open interest was hovering in that mark of 90 to 93, 94. It's not entered into the F&O ban, but today's action, particularly, the stock is up on very, very high volumes in the cash side. So watch out for the delivery data. Even on the futures side, the December futures have seen significant amount of open interest addition on the long side. Well, a whole host of list of stocks which can come out, and probably by Friday you'll have all the stocks coming out of the F&O ban as we start the December series, but which are very close are Syndicate Bank, Wockhardt, Chen Irrigation, Jet Airways, Fortis Healthcare, as well as HTIL. So the total open interest as a percentage of MWPL for all these counters is between that 80 to 82% mark, and for the stock to come out, it has to breach the 80% mark. Pradeep.
Okay, and those who get in will only be just for a day, like you mentioned.
Yeah, and it's interesting actually. It's very difficult now to predict, because what happens, people who have already taken positions in the stocks which are in the F&O ban, they're about 12 to 13 stocks. So they may want to roll over their position. So how do they roll over? They have to first cover the November position and take a fresh position for the December contract. And they can actually do that even if the stock is in the F&O ban. So, but the idea is to first unwind the existing contract and then take a fresh position.
Okay, so that will see a lot of action will happen at these counters tomorrow. Well, it's time to take a look at what are the dealing rooms recommending. Darshan Mehta is here with the dealer's top pick. Darshan.
Well, Pradeep, just take a look at Capacite India. It's up almost 12%. Recently listed, but seeing a lot of traction in the infrastructure real estate space. And what we hear from dealing rooms is some Mumbai-based HNIs are actively accumulating the counter. So Capacite is one of the companies that dealers are talking about. The next one is Alembic Limited. It's up almost 7% ahead of the Gujarat election. There seems to be a lot of action of some of the Gujarat-based companies. So real estate play in Gujarat, Alembic is something that is seeing significant amount of traction. And finally, BHEL is down in trade. It's 0.5% for the past few days. It has been buzzing in trade. There is a buzz of a potential order win that the company can get and announce very, very soon. So that is something that dealers are talking about.
Thanks, Darshan, for this update. Capacite Infra, well, that is an interesting stock. We did talk about it. Mr. Chokalingam, before we let you go, any views on Capacite?
No, we had a buy call, even a subscribe rating for IPO, but recently we closed the call. We don't find valuation comfort in the stock.
Okay, so there is no valuation comfort, therefore you'll probably stay away from this stock. Well, one last question, if I may slip in, Mr. Chokalingam, that is on some of the financials which are moving up, over the last few minutes. Mass Financial is one. We did speak to the management this afternoon and they are confident of a 25% CAGR going forward, and also CDSL after a while has started moving up. What's your view on these two?
Mass valuation comfort is not there. In terms of price to book value, I think one of the most exorbitant financial stocks. CDSL is a great company for long-term investors. One can hold, but in the short term, it is already trading about 33, 34 PE. In the short term, the growth is also not in a strong double digit. So only for long-term investors, it could be an apt stock. Otherwise, I would sell CDSL as well.
Mr. Chokalingam, just before we let you go, any top investment ideas that you would like to share with our viewers?
Certainly, we have been aggressively buying stocks like Mindtree and Persistent. I believe that when the manufacturing companies are getting 30-40 PE, here you have a set of mid-sized IT companies trading at 15 to 17 PE on the current year earning, and with a strong balance sheet, a lot of cash on the book. And also this space has seen already 4 to 5 companies being acquired, and post-acquisition the stocks have done very well. So I continue to believe that the consolidation in mid-sized IT companies would continue. So therefore, we have been, buying stocks like Mindtree and Persistent Systems.
Thanks, Mr. Chokalingam, for taking time out for us today. Well, let's look at some of the other stocks which have moved up. Look at some of the chemical names, actually. Fertilizer and chemical. Madras Fertilizers, second straight circuit. We have Kanoria Chemical moving up, and also Sri Pushkar has now joined in. All these stocks have been doing quite well in today's trade. So there are several pockets, in fact, Navneet Ferris, where you see a lot of activity. Well, if you look at this, Hedren, do you like any of these chemical stocks?
Yeah, you mentioned Sri Pushkar, so actually that stock is showing very good momentum on the upside. Firstly, it is set in a very solid higher top, higher bottom structure. So the current structure is actually indicating stock prices are all set to move higher. Secondly, it is also broken out from an inverse head and shoulder pattern. And today's volume is also actually indicating that the breakout is on its way to sustain. So I think a good bet would be Sri Pushkar. The stock is actually showing good momentum with good volumes. The breakout above 280 is actually indicating we may see Sri Pushkar moving beyond 300 levels in the short term.
Well, a couple of your IT or IT enabled services stocks have been on a tear in the past few trading sessions, and today as well you've got stocks like R Systems that's seen good gains coming about, and stocks like Nuclear Software and also Sonata Software, both of them have touched their fresh 52-week high. Nuclear Software is up almost 12% right now. Kunal, on the charts, do any of these stocks look good to you? I'm sure on the charts they would be looking good because they've been moving up, but any trading opportunity that you foresee?
Well, I think one stock that definitely should be looked at is Sonata. It's been a continuous outperformer, and even when IT stocks were not doing too well, this was one stock that actually bucked that trend. It's broken out very decisively this month, and I see the stock getting to much higher levels from the current levels. It's already trading at around 240. I expect for the stock to get to 350 levels if the current move were to sustain. So on any dip, I think Sonata is a definite buy. We've also seen good breakouts in some of the other stocks. For instance, Mindtree, that somebody mentioned just minutes back. I think that is a stock that one could look at too. But the movement, of course, would be faster in Sonata, given that it's not an F&O stock. And Mindtree being an F&O counter, I think is likely to move up much slowly as compared to this.
Okay. Well, we are close to the closing time now. Hadrian, what would be your closing strategy today? Some of the stocks that you will recommend?
Yeah, I would prefer to go with a South Indian bank. The stock is actually, clearly broken out from a short-term consolidation phase that it was stuck into. So today, the breakout has finally come, and with good momentum, good volumes, and even other oscillators are actually indicating that this breakout and the momentum is likely to be carrying forward. Doing a trend and a strength analysis, the trend is solid positive, higher top, higher bottom structure. Strength is also indicating that we may see the momentum being carried forward. So South Indian Bank is something that we are bullish on. It is also one of our preferred, smaller banks to go with because of the low volatility that the stock offers. I think one can definitely, see a target of close to 34 if you are a short-term trader. Whereas if you do a weekly chart check, it is actually broken out very beautifully from a rounding bottom kind of a formation. Which indicates that South Indian Bank, if someone has the patience to hold on to 3 to 4 months, it can deliver very decent returns, and I see a target close to 40 rupees with a 3 to 4 months perspective on a South Indian Bank.
Kunal, what are your top trading strategies at the moment?
Well, I think if you look at the overall market setup, I think it's definitely advisable to be slightly more conservative, given that we've seen a lot of volatility in tomorrow being expiry. But some stocks have broken out very decisively. Jet Airways is a stock that we were mentioning earlier. I think it's got a very good chart trajectory. This can be looked at from a short-term trading perspective. The other stock that deserves mention is Divi's Lab. Although it's not doing too much in today's trade, but the overall structure is very positive. And I also expect some bit of short covering to kick in tomorrow. So Divi's Lab could be another stock that one could look at from a short-term perspective.
Okay. Pull up the intraday chart of Escorts. That's trading almost at day's high, and the gains have come in the last 10 to 15 minutes. There you go. It was just about trading flattish throughout the session, turned into red. But there's been some buying momentum which one has seen just in the last 15 to 20 minutes. Kunal, on the charts, Escorts, what do you make of the move which has come in the last 15 to 20 minutes?
If you look at the charts for Escorts, especially if the intraday charts, the kind of breakout that we've seen, the volume build up, especially in the F&O side of the market, I see the stock getting to at least 725, 730 levels tomorrow. So makes for a pretty good BTST trade. One could put a stop loss at around 700 and eye targets of 721 on this one.
Okay. Well, there is another stock that our viewers actually want to know about is Waterbase. Well, I heard this name after a long time, really. This company is also into shrimp business, and definitely that segment is getting excited now. Kunal, do you track this stock? Do you have a view on Waterbase?
See, I'm bullish on all of these the kind of the business that this is in. All of these companies have done very, very well. Godrej Agrovet has done well. ADF Foods has done well. All of them have got very strong chart structures. So I think Waterbase too has broken out on the charts. And if you are a longer term or a medium term investor, definitely makes for a very good buy. But again, not so much of a trading play. I think this is more like a long term investment.
Okay, that's the view on Waterbase Limited. Pull up the intraday chart of PPAP Automotive. This counter has touched its fresh 52-week high, and it's sitting with gains of almost over 10%. In fact, today's the gains which you're seeing, the intraday chart of PPAP Automotive is the stock that I'm talking about. It's PPAP Automotive. There you go. It's almost at day's high, up 14%, and it's gone up on high volumes on the cash side. 26,000 shares were traded on NSE yesterday. Compare that to today's volume. Almost 2.2 lakh shares have been traded. Hadrian, on the charts, PPAP Automotive at fresh 52-week high. Would you look to buy in PPAP?
Yeah, PPAP has actually given a very good breakout today itself, and as you already mentioned, volumes have also been accompanied with the buying that has happened. The breakout has actually come close to the 475, 476 zone, and I think definitely we are closing above the same. So it is a definite buy. The strategy should be buy at these levels because the projection of this consolidation breakout is indicating another 40 to 45 rupees upside. Although it may not come in a single day, it may take almost 3 to 4 days, but definitely one can consider buying post the breakout, and one can play for a target close to 525 to 535 in the near term.
Okay, 525 to 535. These could be the important levels to watch out for. Tata Global has been moving up for a while and is correcting today. Kunal, do you see a support nearby?
Well, definitely. I think it's got a very good chart structure, Pradeep. Although, again, we had a blow-off move yesterday, and today it's come back and it's closing below yesterday's open and the highs. I think that's kind of a negative in the immediate term. So the stock might actually correct to 265, but around 265 I see robust buying support, and that's an area where one should look to buy the stock. So 265 is an area, if you're a medium-term investor, I think Tata Global can be picked up at those levels.
Okay, so these are the levels really to watch out for in Tata Global, but this is time to wrap up today's action, and let's go across to Navneet for that.
Well, Pradeep, not a great closing at all. In fact, we are closing at day's low. Nifty's breached the 10,350 mark. 10,348 is the current level. Remember, today was the penultimate day for the November series, and 10,350 was the first support that we were watching out for. Sensex 2 closing the day with cuts of almost 42 points. The Bank Nifty, 25,766 is the level where it's closing. Remember, the first resistance is at about 26, and support will be coming at about 25,500. In terms of broader markets, well, they too succumbed to pressure in the last hour of trade. Nifty 500 down 21 points. The BSE small cap index, no major losses, but still cuts of about 19 points seen there. And you had the Nifty mid cap free float index saw cut off as much as 0.5%. Let's look at Sensex constituents then. Wipro was the top gainer today. That stock gained 1.5%. Adani Ports surged in the last hour of trade, but I think it's closing off day's high, but still up 1%. Sun Pharma was up almost close to 1%. FMCG major HUL 0.7% gains seen there. And the other stock which were up were Bajaj Auto, Bharti, L&T, Tata Steel, and even Maruti and ITC, which are your heavyweights in the index, ended the day in the green. On the losing side, Axis Bank was your top loser with cuts of 2.5%. Asian Paints and your heavyweights from the financial space, which was weak in the morning session as well. HDFC, State Bank of India, TCS, Dr. Reddy's, and Hero MotoCorp were a couple of other losers. I don't know if this news is correct, Pradeep. I'm just getting a message which says Bitcoin has crossed $11,000 mark. I'm going to check that.
Anything is possible for Bitcoin, really. But let's look at some of the mid caps which are kind of trying to keep pace with Bitcoin, and Shankara Buildcon took the lead today. At least the stock continues to move up. Over last 3 sessions, I think it has moved by around 25 to 30%. You also had Capacite among the late movers, but closing at the day's high. You also had ADF Foods doing well in today's trade. Some of the chemical fertilizer companies were also moving up in today's trade. Prominent would be Kanoria Chemical, also Shri Pushkar, but most interesting is Madras Fertilizer, which saw the second upper circuit today. It was locked at the circuit for most part of today's trading session. Among the mid-cap IT names, Hexaware is one that should figure in your list. Well, let's look at some of the losers also. Some of the stocks like Relaxo, VIP, Tata Global, Trent, all these stocks have seen a significant run over last few sessions or in some cases maybe a few weeks, and they came under some pressure. So there is a little bit of churn also happening where traders are booking profit on some of these prominent mid-cap names, Navneet, if you look at it. But there are more gainers than losers in today's trade, no doubt about it.
Market has been stock specific in the past few sessions, but let's also look at the contributors list among the Nifty constituents. HDFC Bank, which is a heavyweight with almost 10% weightage, was trading in the green, and that contributed almost 4 points. L&T, Bosch was their top gainer on Nifty. ITC, another heavyweight, that ended the day in the green. Well, on the losing side, what actually dragged the markets lower today was HDFC, Axis Bank, TCS and State Bank of India. And if you look at this list, it's primarily the financials which were weak, in fact, in the morning session as well. In terms of advance decline ratio, the broader markets also succumbed to pressure, and that is clearly visible on this chart. That's the intraday chart. We opened with more of advances throughout the day, but towards the end, you saw that selling pressure coming about here where declines increased. So it was as much as 6:8 on National Stock Exchange. Well, the turnover was just little bit about average, 7.6 lakh crore. The NSE F&O turnover was about 7.3, and the cash was about 28,500. This figure is below average. Usually we do get to see 30,000 crore of turnover on NSE. Well, the volatility ended the day in the green, once again above the mark of 13. Remember, majority of your analysts have been tracking this. Also in the November series, we've seen volatility increasing almost 15 to 16%. Just few stocks I want to highlight. The Nifty Realty Index was your top sectorial gainer for the day, and you had stocks like Sobha, which was up 10%. Prestige was the other one, which ended off day's high, but that stock ended the day in the green with gains of 4%. Both of them touched their fresh 52-week high. And in the past few sessions, we've seen the media stocks doing pretty well. So Hathway Cable was up 11%, and TV Today was up almost 2%. And while we were talking about Bitcoin touching $11,000, no, I just confirmed with my producer, it's touched about $10,750. So we're still waiting for the $11,000 mark. But on that note, let's get you some closing thoughts going from our guest. Hadrian, I'd like to come to you. Tomorrow being the last day for the November series, how would you be approaching any sort of trade on Nifty or Bank Nifty?
I definitely stick with the long positions for both the Bank Nifty as well as the Nifty. Although rollovers have not been that impressive, they are actually below average, and even the overall turnover, if you've just mentioned, they are below average. So I think all these things are there, but I still feel that the current trend is pretty strong on the upside, and long positions should be held. If tomorrow in the morning we may see a gap up opening, we'll definitely make good money on the long positions on the Nifty as well as the Bank Nifty.
Kunal, would you like to guess the expiry level for tomorrow?
Well, that's always difficult, Pradeep, but I think I'll put my dollar on actually the Nifty expiring below 10,400. There's a very high probability that you won't see those levels tomorrow. So 10,400 is, I'm quite sure markets should not go beyond those levels tomorrow. On the downside, I think we shouldn't actually go below 10,325. So this 80-point range is where I think the expiry is likely to happen tomorrow.
And there was a lot of unwinding which was seen for a couple of these put strikes for the likes of 10,300 and 400. In fact, there was intraday unwinding seen towards the end. The 10,300 put strike shed almost 2 lakh shares. Well, on that note, we'd like to thank both our guests, Hadrian as well as Kunal. Thank you very much for joining us today and giving us your technical views on the markets. And on that note, it's a wrap on this edition of Countdown. It's goodbye from Pradeep and my side. Stay tuned to Bloomberg Quint Live.